Welcome back, Freedom Savers. It is Friday and time for the Friday portfolio updates. This will be my Roth IRAs update. Before we get started, a couple pieces of news. One, J&J dropped like a rock today just because the news came out that they knew about asbestos. They knew about asbestos being in baby powder for years. They're denying it. This isn't the first time that that's been a claim in the but the news came out and the price dropped. So J&J dropped quite a bit. I don't think they're technically on sale right now. We'll take a quick look, see if there's a buying opportunity for them, but I don't think there is. We go to a 1 year. Yes. Yes. They were at 142 a year ago. They're at 133 right now. So it wouldn't be a bad time to jump in. Again, if you saw my video on what a dip is, I consider a dip when the price drops below what it was a year ago. And that's easily below it. And it's still a great company who's done well over the past 5 years and will continue to do so. Just my opinion. The other one is Walmart is actually doing testing with Flippy in some of their little, I guess, restaurants in their stores. I don't know. Anyway, Flippy is a robot that automatically fries burgers and fries and cooks for them automated. So basically, they're getting into robotics. They've also recently got robotic like floor washers and stuff automatically running through the stores. So they're trying to move into the newest technology. So that's kind of cool. Well, their stock isn't going a whole lot of anywhere, but they're still stable and they're paying the dividend. That's all I care about. Altria, I'm sure you heard about this one. Altria invested $2.4 billion in Kronos, which is a marijuana company in Canada where it's completely legal up there now. I think this is a great move. It's a very risky investment, I think, but I think that it's one that's going to pay off. And I mean, with marijuana expanding and becoming legal more and more, and already being legal where this company is that they invested in, I see nothing but positive results from that. So, all right, there's the news. Sorry about that. Back to the portfolio. Current value is $4,743.63 with $14.76 in cash. I'll go over the dividends in my spreadsheet because it's just easier. Nothing's changed on the portfolio. I haven't bought or sold anything. There's been no spin-offs, none of that. There's some coming, but nothing currently. Holding wise, you can see here. I've actually got a full share in over 30 of my 100 stocks now. So we're getting there slowly but surely. Eden Vance is my biggest loser according to this, and Northwest Natural is not my biggest winner as usual, but California Water Group is. So let's go to the spreadsheet where we can get better data. So I've invested a total of $4,900. The current value is $47.43.63, which means I have a total loss currently of $156.37. As you know, the markets have been up and down, and more down than up. And I'm good with that. I have no problem with that. It means my stocks go on sale. As you know, this is my Roth. These are completely. These are very safe with great history, long-term companies. So I'm confident they're going to be around and paying their dividends for a long time to come. So when this happens, it just means that my stocks go on sale and I end up buying more by dollar cost averaging in. Oh, let's see here. Dividends. I have earned a total of $23.47 in dividends. I've been paid $13.85 of that. As you can see, December has now blown every previous month out of the water and has paid me $7.63 in dividends. Centerpoint, which by the way is taking over, I forget which company. Anyways, Centerpoint raised their dividend by 3.42%. Yeah, okay. And Edison International raised theirs by 1.32%. Yeah, okay. And Nucor raised theirs by 5.26%. Better. And Pentair raised theirs by 2.86%. Oh, and one more. WP Carey raised theirs by 0.5%. So while some of these dividend growths are small amounts, I'm happy with them. They are still pay raises for me. Let's go to the yearly dividends. Overall, this is the big picture of the portfolio. There's been 5 investing days. I've deposited $60 a day for a total of $300, which increased my yearly income by $10.08, giving me a yield on cost of 3.36%. My average yield on cost is 3.23%. Currently, we are getting a return of 3.22% on this portfolio. Not bad, not bad. So our yearly income is up to $157.74, which brings that to an average of $13.14 a month. We're getting there, guys. Slowly but surely. The snowball is growing. Still a small baby snowball, a baby snowball. You throw it and you're like, ah, what was that? It's a raindrop. But that's okay. It's growing. It'll soon be an ice ball. So that's the update for the Roth. I'm excited. It's doing its thing. It's doing exactly what it's supposed to do, whether the market's up or down. We're growing as we're constantly depositing because we are down. But we are growing, and we're definitely growing our dividends, which is what this is all about. So that's all I got. That's the Roth update, guys. I hope you do good, and make sure you check out my aggressive taxable, or what's now called the crazy aggressive dividends portfolio, as there are major changes in that. If you haven't watched those 3 videos, which was supposed to be 1 video, but end up being much longer of a process than I expected, check it out and see how not to invest, basically. All right, guys. Have a good one. Thanks for watching. All right, guys, thanks for watching. I appreciate it. Be sure to hit that subscribe button down below, and if you liked the video, hit that like button for me. If you want to hear any specific type of information, anything that you're interested in, you have any questions, just drop me a comment down below. Let me know what you think. Let me know your opinions on this video or any other video I've made. And if you know anyone else that might be interested in this video, please be sure to share it on your social media and share the knowledge. Thanks, guys.